Hello everyone and welcome to Financial Accounting. Today I will go over a fascinating and complex problem that often arises in the preparation of the statement of cash flows using the indirect method. In this video, I will show you how to adjust net income when the equity method of accounting is used. Before we get started, thank you for liking and sharing this video. It really helps out this channel. Please consider subscribing so you don't miss new videos. Your comments are also greatly appreciated. Equity method accounting and the special problems it presents while preparing the statement of cash flows are covered in intermediate accounting. If you're new to statement of cash flows preparation, I have many videos to help you learn it. I am posting the link to the playlist here and in the description below. We have already discussed in previous videos that cash flow from operating activities can be prepared using a direct or indirect method. The indirect method requires starting with the net income and showing all adjustments required to arrive at the net cash flows from operating activities. The adjustments are required because some transactions that affect the net income don't involve cash, like depreciation, and some involve cash but are investing or financing activities. Remember that we are working on the operating activities section of the statement. Before we get started with the statement of cash flows, let's briefly look at the equity method of accounting. I think it will be easier to understand the adjustments once you see how transactions affect the net income. The equity method is used when one company has significant influence but not control over another company. It is usually an ownership stake between 20% and 50% in another company. When one company invests in another, it records this purchase as a debit to equity investment and credit to cash under the equity method. At the end of the year, the company that made an investment needs to record a share of the investee's income and cash dividends if any dividends were paid. To do so, it debits equity investment and credits investment income. If dividends are received, they are recorded as a debit to cash and credit to equity investment. These transactions affect the statement of cash flows. Let's look at the adjustment we have to record to ensure the cash flows from operating activities is correct. Victor Company purchased 40% of Myla Incorporated on January 1st for $120,000. At the end of the year, Myla reported net income of $100,000 and pays a cash dividend of $30,000. On January 1st, when a purchase is made, we debit or increase equity investment for $120,000 and credit or decrease cash for the same amount. At the end of the year, we record two entries. One to record a share in income and another to record dividends. We debit or increase equity investment for $40,000, which is 40% of $100,000 of total income, and credit or increase investment income for the same amount. If you need to review the rules of debit and credit, I am posting the link to the video here and in the description below. To record dividend received, we debit or increase cash for $12,000, $30,000 of total dividends multiplied by 40%, and credit or decrease equity investment by the same amount. Now, let's see how these transactions affected cash flow from operating activities and what adjustments are required to the net income to arrive at the net cash flows from operating activities. The acquisition of Myla's stock is an investing activity and will be reported in the investing activities section of the statement of cash flows. $40,000, a portion of Myla's net income, is included in Victor's net income. Since it is not a cash transaction, it should be subtracted from net income. The dividend of $12,000 received from Mila is considered a cash flow from operating activity. Since the dividend was credited to the equity investment account, not the revenue account, it should be added to net income. Therefore, Victor would deduct $28,000 from its net income in the computation of net cash flows from operating activities. Note that if you received a cash dividend from an investment for which you don't use the equity method, the dividend is already included in net income. No adjustment is required. I hope you found this video helpful. If you did, please make sure to subscribe, hit the like button and ring the notification bell so you are notified when we release more videos like this. Share this video with your friends and leave comments. Thank you all so much for watching, and I hope to see you all again in the next video.